Hello, everyone. Welcome. My name is Regina Patero. I have the privilege of being a class of '82 alum, and I'm really delighted to be here today and so happy to see so many wonderful alums. It was a real honor that the school asked me to introduce this session, and again, it's called Change for the Better, Mainstreaming Social Impact. You know, Columbia Business School has meant so much to me personally and also professionally. And I can tell you one of the biggest reasons is because I used to be an archaeologist. So you can imagine how much I knew about business. And within a month of starting Columbia Business School, it completely changed my life. I realized that I wanted to go into Wall Street, that I wanted to go into sales and trading, but most importantly, you know, Columbia is so good at teaching us all the real basics, whether it was accounting, finance, marketing, all the real technical skills that we need to be successful in business. But what it did for me specifically is it changed the way I think. What it did was it showed me that this was how the world really worked, and it was a real eye-opener. It really changed my whole lens of how life was. So I was very fortunate. I've had a 36-year career on Wall Street, first at Lehman Brothers shortly, and then for many, many years here at Gabelli Funds. On a personal level, it's also been very important to me. It's introduced me to so many incredible people, not the least important, the very most important, my husband. And also my daughter is a Columbia MBA from 2 years ago. So it's been a great experience. I just want to say a big thank you to Columbia Business School. It's just enriched my life in so many ways. Now, here we are to start this wonderful panel. It's called Change for the Better, Mainstreaming Social Impact. Unfortunately, Professor Usher, who you see in your program, is not able to join us today, but standing in, we have moderator Geoff Heel, directly to my left here. Geoff is the Donald C. Waite III Professor of Social Enterprise and the Bernstein Faculty Leader at the Bernstein Center for Leadership and Ethics. Professor Heel is noted for his contributions in economic theory and resource and environmental economics. He's the author of 18 books and about 200 articles. Professor Heel is a fellow of Econometric Society, past president of the Association of Environmental and Resource Economists, and the recipient of the 2013 Best Publication Prize of the European Association of Environmental and Resource Economists. And that's just naming a few of his accomplishments. So you can read more about him in your program today. So now I have the privilege of turning the floor over to Professor Heel.
Thanks very much for that kind introduction. As you heard, I'm standing in for Bruce Usher. Bruce sends his apologies for not being here. He was due to fly in last night, arriving at lunchtime today. But unfortunately, as I'm sure plenty of you know at your own cost, flights up and down the east coast of the US have been badly disrupted by the recent hurricane. So, yes, okay, can you hear me now? Yeah, right, whoops. Why don't I just hold it here? Okay, great. Okay, great. I think low tech is sometimes better than high tech, right? Okay, so let me start again. As you just heard, Bruce Usher isn't here. He sent his apologies, his sincere apologies. He's a great friend of mine. He was due to fly in late last night, arriving around about lunchtime, but many flights up and down the East Coast last night were severely disrupted because of the hurricane, and his flight wouldn't actually arrive until about 3:30, which is a bit tight for making it to this meeting. So we canceled Bruce, and I'm standing in his stead. And it's a real pleasure to do that. I probably won't be quite as good a moderator as Bruce, but we've got an absolutely great panel. Thanks to the amazing selection of alumni, we've got a great panel. On my left is Sedef Koktenturk. She's a fund manager. She used to work for Generation Investment Management, which I'm sure many of you know is one of the original players in the sustainable investing space. Very high-profile enterprise. She recently left them and is going to Genesis Investment Manager, another GIM. But she's taking a little time off in between. And she was a professional windsurfer and represented Turkey in windsurfing in the Olympics. I thought that was a remarkable achievement and well worth mentioning. So pleasure to introduce Sedef. Maggie Lew comes next. Maggie works for Bridges Fund Management, another major player in the sustainable investing field. Tracey Travis is the CEO of Estée Lauder. CFO of Estée Lauder. Sorry. Just one letter different, right? But a big difference. And as we all know, Estée Lauder is both a major company, but also a very major player in the sort of the social impact space, and has a strong reputation for being passionately involved in a number of causes. And then last but not least, we've got Shai over here, Shai Weiss, who works for Virgin Atlantic. He's the director there and their chief commercial officer. Again, Virgin is a very high-profile company with a strong reputation for heavy-duty involvement in environmental causes. So it's a great pleasure to have this panel here. Thank you very much for coming, guys. Format is we're asking each panelist just to talk for a couple of minutes, saying what their company does in the sort of social impact space. After they've done that, I'll ask a number of questions to them, get a discussion going, and then we'll turn it over to you. And it'll be sort of Q&A between them and you, moderated by me. So, Sedef, I'm afraid you're first here.
Yes. Thank you. Generation Investment Management was founded in 2004 with David Blood, a partner of Goldman Sachs, and Al Gore, Vice President of the United States, with the idea and the mission to integrate sustainability factors, or ESG factors, or environmental social governance factors, into a traditional asset management framework. Their initial fund was a long-only public equities fund, global, which has outperformed MSCI World over the last 13 years. They didn't want to disclose sort of their outperformance until a 10-year track record, and then it became public. And there was a General Atlantic article on it, if you're interested in reading. And then the subsequent fund is a private equity fund or growth equity fund that has more of an impact focus, much more defined than the global public equity fund. With the idea of investing in companies or fueling companies that are trying to make an impact in climate change. The third fund that the firm is raising right now will have a broader impact focus with social and human factors integrated as well.
Does this work? No. Yes? No, okay. Hi, I'm Maggie Lew. I am from Bridges Fund Management. I'm one of the partners there. And Bridges was founded in 2002. And we are kind of an analog of Generation in that we are currently exclusively focused on the private market side. But what our specialism is using impact, so driving societal changes or contributing to solutions to the largest challenges faced globally by using investment. And the way that we have been doing that at the moment is through a multi-strategy approach. So we have some lower mid-market private equity funds, primarily in the UK. We have some real estate funds that are taking an opportunistic approach to building buildings that are, for example, responding to the needs of an aging population, or lower cost housing, which is a very acute problem in London, as many of you may know. And by doing that, we really believe that you can generate really attractive returns. So we're targeting market rate returns for our investors. Our investors are primarily pension funds, endowments, insurance companies, and also a good number of high net worths and families as well. Since 2002, we've raised just over £1 billion sterling. So our funds are typically about the 200 million marks, and we are really wanting to drive, obviously, the whole sector forward. So when we got started, we were that was before the term impact investing was coined. And I think we're now seeing really an upswell of that. So look forward to discussing what that means for all of us.
I'm Tracey Travis, again, the Chief Financial Officer at Estée Lauder Companies. I do have responsibility for finance, IT, investor relations, and a few different other areas, so it's a broader role than CFO, but one of the important roles that I have as the Chief Financial Officer is making sure that we are investing for sustainable long-term growth of the company. As was mentioned, Estée Lauder is a 70-plus year company, founded with a very rich family history by Mrs. Estée Lauder. And part of that family heritage has been to give back to communities and be very involved in philanthropy. So activities like breast cancer research is something that the company has been very involved in. The family themselves have also been very involved in philanthropy. We've organized our social impact areas, and when we think about ESG and sustainability, we think about it in three broad buckets. The first is our culture. So diversity and inclusiveness is very important to the company. We also invest and are increasing our investment in terms of employee education, making sure that we have continuous education, and the Lauder family has been very committed to that for many years. The other area that we are focused on is social impact and social investing. So we do have brands that are defined by brand purpose, brands like Aveda, Origins, that do raise money for various causes like keeping the oceans clean, making sure that water is available. Girls' education is an area that is an important focus for the company as well. And then the last area is sustainability and environmental. So we certainly are looking at reducing our carbon footprint, making sure that by 2020 we have zero carbon change. And other areas like recycling are also areas that we're focused on, and we are very quickly moving into green chemistry as well as recyclable packaging.
Can you hear me? No? Yes? Yes. Okay. So my name is Shai Weiss. I'm the Chief Commercial Officer of Virgin Atlantic. Virgin Atlantic is a UK-based company. Some of you think we may be called Virgin America. That's our sister company, but we're not the same company. In January, I get to get the best job, as far as I'm concerned, in aviation. I get to take over as the CEO of Virgin Atlantic. Virgin Atlantic is 34 years old, founded by Richard Branson, Sir Richard Branson. And for us, it's pretty straightforward what we have to do in terms of environmental impact or social impact. Richard himself has really coined the term kind of business as a force for good. So for us, that's the overarching principle under which we operate. We're also a purpose-led company, and ours is to embrace the human spirit and let it fly. And our last iteration of that is we have a newfound ambition. Our ambition is to be the most loved travel company. And everything we do stems from that question. Are we doing something to be the most loved travel company? And in our minds, in this day and age, if you are to become the most loved travel company, it's not just about customer satisfaction. It is about what we do indeed for inclusivity and diversity. We can talk about it a bit later. Of course, what we're doing in the environment. And the last pillar here is what are we doing with the community? We fly across the world. We have offices everywhere. And we should do so much more in the communities in which we serve through education. So that's a bit about Virgin Atlantic and purpose.
Great. Well, thanks very much indeed, folks. If you go back not all that far, 20 years, the turn of the century, social impact investing was almost unheard of. And businesses were not particularly concerned about ESG types of issues. It's something which has appeared on the scene in the last couple of decades, maybe a little bit more than that, but certainly since somewhere around about 1995. And if I'd offered a course in this sort of area back in the 1990s, I'd have had almost no students in it. If I offer a course in this area today, it's full immediately. So there's a big difference. People are much more concerned about these issues now than they were a couple of decades back. Why? Why are businesses today so much more interested in social impacts? And along with that question, if I could get your thoughts on that, is there a business case for worrying about social impact? Is this something you do because it's right in some ethical sense, or is there actually a kind of cash business case for doing this? Sedef.
If I may start answering your questions. If I may start answering your questions from backwards, the way David Blood, one of our founders, defines the business case for social or impact overall, but especially social impact, is that we don't want to exchange value for values, and that over the long term, which is how investors should be focused. Companies that are conscious of environmental, social, and governance issues will outperform their competitors. And we've seen examples of this in the past with the Lehman bankruptcy or oil company spillage in the Gulf region. And those companies that are forward thinking and are taking an active approach towards environmental and social issues are outperforming their competitors. At the very least, they're avoiding risk. Similarly, I think we've seen over the last 10 years investors driving this change. We've seen consumers driving it with the millennials. And obviously the climate events have increased over the past, so people are becoming more aware of these issues. In terms of, is there a business case for it? This is why I mentioned earlier, Generation made a conscious effort to not disclose the results for the first 10 years of their funds. And they wanted to show the case that long-termism would have a positive impact on results, and they have outperformed the public markets by 500 basis points compounded over the last 12, 13 years and continue to do so. Avoiding risk is a big part of getting to exceeding returns, and then identifying those companies that are thinking about these issues more proactively and giving them the capital to continue growing their business is one way that we see we're making an impact as investors. Sorry.
Great, thank you.
I think in terms of what's driven this rise of interest, I think it's become more and more apparent the challenges that we face globally, whether it be from a social perspective or environmental perspective. And the latest IPCC report couldn't be any starker in terms of saying that really have 13 years left to avoid the climate warming by more than 2 degrees Celsius. I think what that does is actually now people are coming to expect more from companies. I think you've seen a retrenchment from government, and public sector is being put in the frame much more publicly to say, what are you going to be doing to address these issues? I think you touched on the millennials, their attitudes. Deloitte's been doing this survey with the millennials now for a few years, and the latest one has, again, seen a reduction in the number of millennials who believe that companies are behaving ethically. Less than half of them believe that companies are behaving ethically. So I think it really speaks to the heart of a business's ability and its license to operate to be doing the right thing. So it's no longer about simply maximizing shareholder value. I think we've now come to see that businesses need to be much more holistic in terms of the value that is driving. And it really speaks to its ability to succeed in the marketplace, down to being able to attract talent. I think we touched on this at the keynote briefly. It's what people expect to go to work feeling. So I think, not every business might be impactful. They might not be actually contributing to a solution, but every single business will have a footprint. Every business has effects. So I think what we need to be thinking about is, as a business or ourselves as a citizen, how can we maximize the positive effects that we're having, or companies having, or your investment is having? And so I think in terms of business case, it's really about the frame of reference. I think the whole concept of value investing and longer-term investing really speaks to these alignment with the value. And for the long-term investors, a lot of my clients are pension funds. So underlying all of those, they are the pensioners. They want to know where their capital is being invested, and to be able to show that alignment straight from how it's being managed through to the managers that are managing them, to the companies that are actually using that capital to drive value, I think is really powerful. And I think there will be opportunities, and I think that's what my firm is trying to do, to find opportunities where you can align the two. And we really believe that by looking at the social, environmental, and governance aspects, you are reducing risk and also finding those opportunities to drive value.
Yeah, I would agree absolutely with everything that's been said. It's a complex world, and the issues that everyone has to deal with today are quite significant. It's not realistic to expect governments, which are fractious in and of themselves in certain areas, to be able to address a lot of the issues that we're seeing today. So the business case for us, from a consumer standpoint, to Maggie's point, millennials are interested in brands with purpose. So that's very important for us as we look at, the growth of the company and the sustainability of the company. Our employees are increasingly active in terms of wanting to be involved in a company with purpose, and are very engaged in our philanthropic efforts and increasingly in our sustainability efforts as well. We have a tremendous, not just millennial, it's actually spreading more broadly than millennial, but we have a tremendous interest from an employee standpoint in our efforts in the whole environmental and social engagement area. And increasingly investors. So more and more, obviously, BlackRock came out with their letter to CEOs this past year in terms of what good governance looks like. But increasingly investors are more and more, particularly I would have to say here in Europe, are asking more and more about companies and what they're doing to contribute to society and environmental issues, et cetera. As it relates to, from a more tangible short-term financial standpoint, I think that, clearly there are areas within the environmental focus that can have short-term results. But really, the longer-term implications associated with not engaging in this area are more significant.
And I think we're similar in terms of our disposition for our people and our customers. I'm going to give you a real story in terms of where it pays back. So 3 years, we have a bunch of 747s, and Boeing 747 is the largest plane, the best plane ever built, if you ask an engineer. And we have Airbus A340, 600. These are large planes, they're 4 engines. And everybody who understands airlines knows that we are the worst polluters in terms of carbon into the atmosphere, and we have to do everything we need to do. So we were about to buy 12 new, very large planes. The purchase order was around $2 to $3 billion. And we competed heavily. A used airplane, in this case, a specific Boeing type used airplane, or absolutely brand new A350. And at the end of the day, we came to the point where we could almost equate the two cases, going for a used one that we would retrofit, or a new one, an A350. And at the end of the day, what tilted it was not the fuel, although the fuel was 30% less on a twin-engine A350 than anything else. New technology, new engines, and improves. And that's, of course, our responsibility. The thing that actually made the biggest difference at the end, once we equated for the fuel, was actually noise. People don't think about noise. But the pollution that we cause, in terms of when we land and take off in various airports, was a fundamental point. And at the end of the day, we probably paid more for the new A350 versus the used 777 for the purpose of being absolutely responsible in the noise criteria, and of course saving 30% fuel versus a used aircraft. So is it going to pay off? Well, the first one arrives in May next year. But since we want, for us, customer satisfaction, and the customers that we attract have a choice, we know that more and more of them, indeed the millennials, but also Generation Z, which is just after them, are choosing based on what you are doing and what your responsibility is. So we believe it will play a big part in that. And this is a case where we actually put money behind that idea.
Okay, thanks very much indeed. It's very interesting. I'm interested that Tracey mentioned the Larry Fink letter to BlackRock customers, investors. I was going to mention that too. He was making much the same point there as you guys were all making, which is that this is something which does pay off in the long run, although in ways which are sometimes quite hard to quantify, I guess. Yeah, thank you. Let me ask Maggie and Sedef, as fund managers, what difference does it make to your life as a fund manager to be interested in social impact and in social and ESG issues, as opposed to being, let's say, a conventional fund manager? I mean, how different are your portfolio choices? How different is your method of analysis and so on?
So again, philosophically, it would be, I think we would all agree that every investment has impact. So it's more, do we want to be on the right side of the impact or the wrong side of the impact? So as a fund manager, to be aware of this impact and to quantify it to the best possible, which is much easier on environmental factors than it is for social and to some extent governance factors. gives an investor a more informed view of the investment that they're making and what the long-term risks and opportunities of that investment will be. We've actually, tried to, over the last couple of years, to quantify. We've been trying to quantify this impact, but we've been more thoughtful about how we can do this more scientifically. And the positive correlation between those companies that have higher environmental, social, and governance metrics to their performance is quite obvious. So as fund managers or asset allocators to some extent on behalf of our clients, as we're allocating capital to those companies that are more forward-thinking in these issues, we're also making an impact in terms of how those companies make impact in society or the environment, or as we think about it, the planetary health and human health.
Yeah. Do you try to quantify social impact?
On a relative basis.
On a relative basis, okay. Yeah.
So the qualitative factors are obviously harder to quantify, but we look at, are they in sort of smaller, in younger companies, it's more, are they setting goals? Right. Are they falling, above those targets or below those targets, or how much room do they have to improve? Public companies, it's much easier to get this data because a lot of the public companies have started disclosing their ESG performance. So when we look at this on the social factors, we look at it as internal stakeholders who are the employees of the companies, the commercial stakeholders, the supply chain, and the community that the companies operate in. And we try to identify those metrics or elements that would be most, there's a lot of metrics to look at if you want to go crazy with the data, but those metrics that would be most relevant from an investment perspective as well as impact perspective.
To answer your question, I'll give you an example of an investment that we made recently and the process that we used, and you can have a look and kind of see, I think, what areas would have been different, and I would argue that there are kind of areas that are superior for the mainstream model. So this investment, the way that we look at the universe, because we are impact-driven, what that means for us is when we source an opportunity, we are able to really be very specific. So in this case, we're trying to look at ways to address obesity. And so we're basically looking for business models where actually the more you grow the business, the more you're going to be tackling obesity. So we could have done, I don't know, a slimming clinic or sell you Weight Watchers meals, or that sort of business. But what we find is that actually the more you sell that product, yes, your customers will lose weight, but actually you want them to gain the weight back, because otherwise you're doing yourself out of a market. So we don't really like that, because that's not really kind of in the spirit of what we're trying to create, the kind of change. So that's why we're trying to prevent obesity. So then we think about how do we do that. We operate mainly in the UK, so in the UK context, which is not very different from a lot of developed markets, childhood obesity is really a big problem. So 1 in 3 11-year-olds in the UK will be obese or overweight. So we looked at this issue and said, how can we start to tackle this really from a preventative standpoint? That brought us to food, thinking about school lunches. So the nice thing with children is that actually they eat quite a lot of the calorific intake through schools. So if there's something you could do about providing healthier lunch options to them through the schools, we think that's a terrific opportunity to start to influence their palate, get them onto a healthier eating habit. So that led us to the school catering sector. And so then from that point on, I suppose we took a pretty conventional approach, looked at the whole universe of companies operating in that sector and said, okay, we particularly target 1 to 5 million pound EBITDA businesses. So then we said, okay, what does that universe look like? And we found about 20 businesses operating there. And then we scanned them, looked at the financials to see which ones might be the most interesting. We narrowed down to 4 or 5. And then we, try to proactively target them, reaching out to them. And in some cases, we wrote to the CFO of the business, introduced Bridges, our approach, and how we might be interested in having a dialogue with them. And I guess through that, we then found a couple of targets. And our approach is also different because I think a lot of other private equity firms would be having this sort of approach, direct origination, approaching them. But I think what we have found is that the response rate that we get from these targets is quite high. So we've had some consultants come in to say that they were surprised that more than half of them would actually bother to respond to us. And I think a lot of that has to do with the ethos that we bring as an investor. So we go to them saying, we're really interested in a business, not just because we think you're a great business commercially, but we really think that you have the ability to address this challenge. Sometimes they would have realized that. Maybe that's why the entrepreneur was interested in that business model. Others, they might not actually realize that actually they have that potential to drive change. So in any case, in this case, we were able to actually secure an off-market opportunity that we acquired. We have also since acquired a second business to bolt on to the business. And what we have found, actually the business, I haven't told you much about it, but their ethos is very much about providing healthier school options. And they have found that within their business, they are more successful in winning new contracts and retaining their customer base because they are able to demonstrate to their key stakeholders, who are the governors, the head teachers, the parents of the schools that they serve, that they're actually able to provide better options. And then the more that we can help them articulate that impact, how does that translate into health outcomes, into better educational attainments, the better that they're able to be locked into that relationship with the schools. So we really see that as a driver of competitive advantage because they are focusing on impact. And then you can see that what we're looking for is this sort of reinforcing positive cycle. So I think I think sourcing for us is a big competitive advantage in the way that we are able to secure off-market opportunities. So about 10 of the last 13 transactions have been without competition. So what that means is, of course, hopefully we're able to enter at a lower multiple, drive value, and ultimately deliver better values to our investors. And then just one other point, as a fund manager, another advantage that I see in driving value is from the people side. So hopefully you can tell that I'm quite passionate about what I do, and I feel extremely fortunate to be able to combine that in my work. And I think as a firm, I see that more and more this is attracting such tremendous talent. So my network of being at the Columbia Network, I get approached, very frequently by folks who are really interested in getting into the industry. And they all ask, how do you get into the space? But I tell them that they can actually have an impact in whichever part of the whole value chain or society they're in, because ultimately, I think you mentioned that all of us will have effects. So it's really about focusing on the positive to try to maximize them and then minimize those. I think ultimately, I really do believe that this is how you will generate value for investors, and then ultimately also hopefully address some of the challenges we have globally.
Thanks so much. It's very clear that you're very passionate about what you do. Yes, thank you. That's great. And what a depressing statistic, 1 in 3. What a depressing statistic, 1 in 3 kids overweight or obese. It's a terrible number, isn't it? Yeah. Let me ask Tracey and Shai a sort of an equivalent question, which is, what difference does it make to your day-to-day lives as senior executives in business to be concerned about social and environmental impacts? Is this something that's affecting you every day? Is it something which you think about just occasionally? Is it an integral part of the daily way you do your jobs?
Oh, it absolutely impacts my daily life. Certainly, we are trying to embed sustainability and environmental ESG practices throughout the organization. One of the things that we're quite proud of is the fact that we're a prestige beauty company, so we sell primarily to women, although men are buying more and more prestige cosmetics, and other products. But 80% of our employees are women. About a little more than 50% of the vice presidents in the company are women, and almost half of our board is female. So, when we talk about measurement and metrics, my group is very much in partnership with our sustainability office, which we set up a couple of years ago, making sure that we identify the base metrics, but also that we're using those as opportunities to drive improvement throughout the organization. And it's quite rewarding. I mean, I can't tell you the number of our young employees in particular that are really passionate about what the company is doing. Part of the reason they've been attracted to the company is because the company has a reputation, has always had a reputation for being philanthropic, but being more broadly engaged in ESG areas is something that is quite rewarding on a day-to-day basis.
Yeah, and of course, I would say most executives these days think about it all the time. I'd actually want to focus, rather than just on the environmental stuff, as you did, is diversity and inclusivity. We've actually said this year, we're entering into a new 3-year plan, our strategic plan called Velocity, which is underpinned by this desire to be the most loved travel company. Part of it, we've set very aggressive targets on gender and inclusion. Our targets in the UK are to basically double BAME, so Black, Asian, and minority ethnic, from 6 to 12% in 3 years, and then actually move up in the management level from 30 to 40% gender equality to 50-50 by 2021. And we know that we will fail. And that's really not the point. The point is that we've set aggressive targets that are measured every day. So then once you have those targets, we just finished a big talent review, and from now on, as we go into next year, for example, every senior search that we will conduct, in order to get approval for recruiting that individual, you have to demonstrate that your shortlist was constructed to include gender and BAME. Because we really pride ourselves in no discrimination against anything as we reflect on our people and, of course, as we reflect on our customers. So that is just an example of how everything we do is literally measured against these things. And of course, in operating companies, just as you do, we set these targets knowing that we may fail, but the journey is more important to us than just the final destination.
Thanks very much indeed. That's fascinating. Yeah, I always tell my students that every company operates in 3 markets, right? The product market, the labor market, the capital market. And that, this sort of social impact orientation can help you in all of those markets. It can help recruitment, it can help customer loyalty, and it can also help investor relations. And I guess you guys are saying much the same there. We've got just over 20 minutes left, so I think it's probably a good time now for me to open this up to the audience and to take questions from the audience. There's a lady back there would like to ask a question. Do we have a mic for her?
I've just got to jump into a room.
Hi.
Can I give you a call back a bit later? Yeah. Okay, cool.
Sorry? Okay. Do you have somebody else asking a question? Fine. Thank you for coming. My question is in regards to there's social impact, but there's also shareholder value and going after things that matter. So I may choose to buy organic beef if I want to, but the truth is that's individual. But how do you relate that to investor value where they're a bit further removed from actually having to do it versus looking at what comes in as a return? So if you're going to buy a particular 747 versus the 350.
No 747.
I know, but you the older version, the 777. But anyhow, if you're going to do that, how do you translate that where you don't have the issue with investor? Because there's a lot where there's heartfelt reason why someone would make a choice, but when it really comes down to the financials, what does that ROI look like in terms of the money rather than this feels good, looks good, and this is the right thing to do?
So Shai, that seems to be directed at least partly at you.
Okay, we have one clear advantage. Can you hear me? Yeah. We have a clear advantage. We're a private company, and we're owned 51% by Richard Branson and 49% by Delta from the United States. And actually, once we complete a transaction where actually Richard Branson is selling 31% to Air France-KLM. So we're a privately held company. Definitely in the current structure of our company, with Richard Branson at the helm and the Virgin Group as custodians of the brand, the long run is okay. We love profits and not making losses in our case in aviation, and everything we do is with absolute financial rigor. But we do have the advantage of taking the long run view, and we do pride ourselves in doing the right thing. It's a fact that if you look at the people who work for the Virgin group of companies and the people who run the group of companies, they have self-selected. They are not merely motivated by money. And once you realize that you're not going to be a billionaire, Richard is, the rest of us will not be billionaires, and we can make a difference by running professionally led companies, but with a view of changing society, well, then you really are in luck, and I guess I'm one of the lucky ones.
Thanks. Tracey,
And-
you want to
and-
comment on this?
So we are, can you hear me? We are a public company, obviously, and so we are certainly focused on shareholder returns, but over the long term. And I don't think ESG initiatives are mutually exclusive. You know, there are areas that show a more immediate return, and then there is the destruction of value over the long term if you're not engaged in some of these areas, particularly, as we said before, what consumers are interested in, what our employees are interested in terms of being an attractive place to work. So it is smart business sense. You know, having said that, in terms of the pacing of investments, we certainly do, look at that. You know, we have, an entrenched, supply chain. So as we look at everything from installing solar panels, there are ways to get return on some of the investment. But in other areas we don't. We just recognize that there's a longer term benefit, and we manage that all within our financial model.
I think I just want to echo that. Actually, it really is not mutually exclusive. Some of the stuff is, of course, but a lot of it, if you break it down to very specific reasons and ideas, you'll find that the financial gains are terrific. I'll give you a very small example. Headsets on airplanes. You all know that it usually comes in plastic. Well, on our planes, as of a few months ago, you only have a paper wrap, which is also a wrap that advertises our charity. You won't know this, but on some of our cabins, we've stopped offering beef, and you won't even notice this. Nobody's noticed. We've done that because we know that beef is one of the biggest contributors to global warming because of the turn of the soil. So it's small stuff, but the big thing here is, I think it's the battle for talent. The next generation does not only care about working for the most profitable company. They want to work for the most exciting companies. That's one. And our customers actually discriminate against. We are not custodian. They know we're an airline. And they want to see that we're doing everything in our power to do better than we should, absent change.
Another quick question? Oh, yes.
My name is Andrei Chicherin. I work at Green Climate Fund. Green Climate Fund is a financial mechanism of United Nations Framework Convention on Climate Change. And environmental and social impact is definitely an integral part of our activities because we deal with that on a daily basis, especially by catalyzing a private sector money trying to invest with us into the project which we support in order to achieve wider impact and larger impact with the support of the private money. And on a daily basis, we face challenge that, especially for the companies, for the private sector companies coming to that activities, they face a tremendous challenge of addressing the issues of measuring and managing that social impact, especially or environmental impact, especially going forward. Where not a lot of clear understanding what I was supposed to do, how I was supposed to measure that, and how I was supposed to report that. So could you mention something like a Center of Excellence, private or public global initiatives where these newcomers can find information, best practices, knowledge sharing, in order not to reinvent the wheel every time they come and then maybe share their experience going forward?
So a question from the Green Climate Fund, which is involved in sort of public-private investment partnerships in this sort of area, asking for sort of sources of expertise and quantification techniques. Maggie, you seem to have something to say on that.
Yeah, thank you. I didn't plan that question, but I did want to advertise and kind of let you know about a really exciting global coalition called the Impact Management Project. Not sure if you heard of it, but it was launched at the UN General Assembly 2 weeks ago in New York. And this was something that has been now in the working for 2 years, and it's to address this question, which stemmed from the first question of how do you measure impact. But we this is for full disclosure, my firm also has an in-house advisory team, and we've been the ones that have been facilitating this project. And we've been working with about 2,000 partners around the world on coming up with the conventions. How do we think about impact? What do we mean by it? Because when you say impact investing and somebody's talking about sustainable investing, are we talking about the same thing? So what does good look like? So before we can measure, we need to really understand what it is that we're trying to achieve. So to your point about setting targets. And so that was the spirit in which this project was put together and now has been running for 2 years. And some of the partners are asset managers like large pension funds, to the Rockefeller Foundation, to BlackRock, also Neuberger Berman, some of the players that have been collaborating and funding the work. Now it's entering this third phase. Is really interesting because now we're really coming down to, okay, we've now agreed what impact means. So there are 5 dimensions. So if you were interested, I would encourage you to look at the website impactmanagementproject.com. And now we could now begin to think about everyone actually using that framework. Hopefully that's our goal, so that we are talking the common language. And you can start to really, what's missing in the market, we find, is this value chain is a bit broken because people have different ways of talking about things. So when you try to connect capital to actually the enterprises that are trying to create the change, we're not really able to work very efficiently. So often the transaction cost for understanding what one means by impact is too high. And so that flow of capital is just not going as much as we need it to. We need 2.5% of the global GDP just to solve climate change. So just think about the scale of capital that needs to be moving. So that's very much in that spirit. Now, it won't actually go down to the specifics, because what we're not trying to do is replace what's already out there. So there are frameworks like IRIS, et cetera, where we're trying to define common metrics that everybody could use, can understand what does a job mean. You know, do you mean a full-time job or do you mean a part-time job? How does wage come into it? That there are definitely movements, and I think you're absolutely right that we need to get that right in order for the whole sector to thrive. Thanks.
Anybody want to add to that? Great, if not, we'll move on. Yeah.
Question for Estée Lauder. You mentioned some pretty interesting gender diversity numbers there. I was wondering, why do you guys discriminate against men at the junior levels? And then it sounds like you discriminate against women at the senior levels.
No, we don't discriminate against men. We have a number of women that are interested in working for the company, given the products that we sell. So one of the things that we certainly have looked at as it relates to gender parity, to the comment that was made earlier, particularly as it relates to the senior level. So I mentioned that 80% of our employees are women, but as you move up the chain, you saw much fewer representation, or much less representation. So that's something that we have looked at in terms of what is our balance, with respect to how we're actually evaluating employees and making sure that we are balanced in terms of looking at management as well as with our board of directors. So. We look at our consumers, and we look at the reflection in our workforce as well as the extension of people through management levels. But we definitely don't discriminate against men. Our true CEO is actually male. So.
Gentlemen here.
Yes, hello. My question is to Tracey Travis and Shai Weiss. My name is Robert Yu. I'm class of 03. I'm from Korea. I run a healthcare company in Korea. I just, listening to you, you had a sustainable office. I mean, you're a large company. We're a relatively smaller company. Being in healthcare, we are already doing social impact, but I guess I want to do something more formal besides healthcare and whether it's environment, what have you. How do you even go about it? Could you give me advice in what to do? I'm a little, I can't have a sustainable office, first of all. And secondly, running an organization, you have to think about human capital. and this is going to sound really weird, but you know, you have to use employees. So does the company pay employees to do social impact activities, or is that something they do on their vacation time or on the side of?
You're clearly from Korea.
Yes, I mean, so just curious. Thank you.
So let me start, since I mentioned the sustainability office. We actually appointed someone who had been leading some of our philanthropy efforts to head up, you know, a broader area of responsibility, philanthropy being one of the pillars of our ESG efforts, but there being many more. We had a number of sustainability and environmental initiatives across the organization, in our R&D area, in our supply chain area, and within our brand portfolio. What we were not doing was pulling it together, you know, in one effort, aligned with you know, a strategy in terms of the metrics and what we were trying to accomplish. So the sustainability office that I mentioned is very small. It's less than a handful of people that really work across the organization to make sure that we're setting the right goals for ourselves, that we're accomplishing those goals, and that we are more strategic and less fragmented in terms of our efforts to make real progress. So it's small, but it's mighty, certainly, and it's something that we just established a couple of years ago.
Yeah, I think one of your questions is how do you go about thinking? How many people work in your company? 200. Great. You should run a survey, SurveyMonkey, and ask them what they want to do. And you'll be surprised the ideas and the passion that you will hear from your employees of what is important to them. For instance, everybody in the company knows that for me, education is number one. So I'm going to use the existing infrastructure that we have. We have a big cooperation with an organization from Canada called Waite, which is all about educating children around the world. But I want to focus in where we work in the community. We don't do enough to actually help the communities in which we work. So I'm using an existing infrastructure. But the best thing that we do is literally ask our people what they want to focus. The other idea I would give you is you're going to find a lot of ideas. Focus. Because it's so demanding in terms of time and attention and funds, and you can just spread thin that you're not going to make a true impact. So we're going to go for one or two big ideas and just rock with them.
Great advice. Thanks, guys. Lady here. Can we get a mic to the lady here, please?
First of all, I want to tell you that Virgin is a beloved airline. I'm hard of hearing. So I pick airline based on the number of movies they show with subtitles.
We show 1,000.
Yeah.
1,000 movies.
Yeah. The question is for anybody who can answer. What advice would you have for an enterprise or a non-profit trying to bring a social cause to the mainstream? We talk about mainstream and social impact, but for example, I run a non-profit for the deaf. So deaf education is my focus. It's a very small cause compared to environment and education and women empowerment. So what is something like a very specific and a very narrow focus? How can somebody bring that mainstream? What advice would you have for
That's a tough one.
that enterprise or a non-profit?
I'm going to sound a bit cool. Go ahead.
Perhaps I'll take a stab. Can you hear me? There's two ways to look at it. Is one within your organization, so you can have social impact within your organization, which is with your employees, and then the second degree of impact is within the community.
So impact in the mainstream in the sense that I work within the deaf education. It is it only remains in the realm of people who are deaf and hard of hearing. I need to bring that to the mainstream, as in, say, Columbia Business School or Ivy League or, the top educational institution, even organizations like yours that are working with enterprises, that are working with environment and education. How do we get your attention? That, okay, here is a very small, narrow focus. We need help too. We need to be mainstream too. So how do we bring that mainstream?
I'm not an expert in the educational space, I don't think. But I think one thing is about how you get the resource, I suppose, to scale your organization. That would be the main thing. And I think it's
awareness and resources both. So
sorry?
Awareness and resources both.
Yeah.
So
I guess I could speak more from the capital side because my firm also recognized back in 2008-09 that the traditional private equity model really only works for businesses that can maximize profit. But there's so many organizations with a cause such as yours where you could have a model that is, could be scalable. I don't exactly know how it works, but you don't really have access to the normal growth equity that you might need to grow. You might be able to access debt in some cases, but actually that's quite limited. So there is an emergence of some impact funds that are really about funding more social enterprises, and it does require you to, it's kind of the next form of venture philanthropy, I suppose. So whether you could think about there's a business model where there are models, for example, in Germany, where there are businesses that are quite very repetitive work. So they found that actually folks on the autistic spectrum could be great workforce for that sort of business. So they've kind of found a way to improve the livelihoods of that population through that sort of business model, and it's something that's quite scalable. So I don't know if the same could apply, but just thinking through what is it that your population is particularly going to be suitable for, or really good for as a talent for a particular sector. That could be a business model that could mean that you could generate revenue and then scale that way. But the other thing is maybe to get a really good spokesperson, I suppose.
Which yeah. I was going to give, I saw something recently, and you may just I want to give you an idea for inspiration. There's an organization in the UK called CALM, C-A-L-M, which raised awareness for men's mental health and the fact that many, well, people don't know this, but men are more susceptible to suicide, especially as they get older versus women, and it's because they don't talk about, they bottle up all their emotions. They ran an unbelievable campaign. It's called Project 84. Check it out. And the inspiration that they got from running just a very profound campaign got them so much attention that it's raised the profile of their organization that everybody's now talking about men's mental health. So I think, I come from, we're in advertising as well. Virgin is a branded company. If your message is strong, get it out there. But you got to think in a way that is not expensive.
We've got time for a couple more questions. If I could take one from the gentleman here and then perhaps over here.
Okay. I am George D. Meyer from Brazil. I'm a very hands-on businessman, and I have a dream, which is to reproduce the sunlight. I'm developing a new light that reproduces the sunlight. And the idea is to increase productivity in raising food, developing food. The question is, would that be considered a business as usual, or that would be considered a social business? And if yes, if some of you would be willing to help me. It can be a very strong impact.
So the sunlight helps promote the growth of...
I am developing a new technology.
Light similar to sunlight.
I am developing a new technology where the light would be a replica of the sunlight, which means that you would have the light 24 hours over a seed. It accelerates the production of the seed about 3 times. Because on average it gets 8 hours per day. In this case, it would be developed for 24 hours. So it develops the speed of developing the seed. And you would be increasing and reducing costs of food production.
So fund managers, would that count as a social impact operation, do you think?
Yeah, that's the question. If it counts as a social impact operation or just business as usual.
So my question to you would be, why would you want to identify yourself as one or the other? I mean, sort of, if this goes back to mainstreaming impact. And if we're trying to get everybody to move towards investing for impact, I mean, if you're trying to raise capital...
Yes, I'm trying to raise capital using the social impact.
So putting my marketing cap on, I mean, to the funds that are looking for impact projects, obviously you could lead with that.
Yes.
But you could also go after more traditional venture capital funds that are looking to fund this.
Well, in my country, venture capital is almost impossible. That's the reality.
But I think fundamentally you're potentially tapping into a huge market opportunity. Because if that technology gets commercialized,
that is right.
You have a huge market opportunity. So actually, if it does work and all the due diligence, et cetera, bears out, yeah, I guess I agree with your point that it will be of interest to an investor. And so the question is, how do you get through that stage of, I suppose it's probably fairly early stage. I think you'll have the similar challenges as any other early stage business, is finding that kind of seed or early stage capital to get to that stage where you could prove that it can be commercialized.
Okay.
So I think you would make the business case for it. I think there's a very strong business case from the social, but actually it boils down to the bottom line.
We've got time for one more question, and that's what have to be the end of the event, I'm afraid. Gentleman over here has the mic, I believe.
Hi, I'm class of 04. I'm just wondering, impact investing usually is more associated with private equity because you can measure things more easily. How do you do impact investing in public equity settings? Because very often people speak about ESG for public equity versus impact.
Yeah.
So if you want to do impact investing, so you could use the criteria from the United Nations. You have 17 criteria from the United Nations that exist for measuring impact investing. How do you do impact investing in public equity settings? Because it seems it's more like a private equity matter than a public equity matter.
Yeah. I think it goes back a bit to the language. So I think impact investing is probably an unhelpful label. So it's really about managing all your impacts, your effects, basically. And so you're basically talking about the same issues. I think some of the public companies, you can't really pinpoint that they're addressing a particular solution, but their footprint will have an impact on one of the Sustainable Development Goals, for example. You know, in terms of decent job will be one that's quite common for all big companies because they will have lots of employees. And so I think if you look at the impact management project, it will be quite helpful because we have, I do agree with you that in terms of actually contributing to a solution, it's probably more suitable for a private equity model because you're able to be much more hands-on, much more engaged than in a public market sense. But that's not to say that you as an investor will have no ability to influence through the public market as well. Because I think as much about it is the signal that we're sending to the market to say that these factors matter and we want you to be accounting for them. So I'm happy to talk to you further maybe after.
Yeah, I mean, I'd like to add, so we actually do invest in public markets, and Generation manages 20 billion in assets, and about 18 billion of that is in public markets. So ESG is essentially the impact. So it depends on which part of that ESG spectrum you want to create impact, or if it's more broad of all the spectrum. But a lot of in some ways, public companies are easier to invest in right now because a lot of them have started tracking this. I mean, as you can see, you know, these are the leaders, but many public companies are tracking their ESG factors. There's many more databases available in terms of how companies are performing. So it's not as impossible to sort of track it. It's a bit of data mining exercise, and it's a bit of mapping the SDGs against the ESG factors. SDGs is the Sustainable Development Goals that UN has set forth. Data mining exercise a little bit.
Okay, well, so we're slightly over time, unfortunately, so I have to bring this to an end, but perhaps you'll join me in thanking our amazing panelists for a fascinating session.